Jason, how are you? Which part of the world are you in right now?
I'm doing well. I am in Toronto. Super exciting time to be in Toronto. We are just talking about baseball, and World Series will be in full swing in a few days.
Have the Blue Jays won before?
The Blue Jays won when I was a kid, two in a row, 92 and 93. So it's been a while since the Blue Jays have gone this far, and outside of the Raptors a few years back, Toronto's had a bit of a drought when it comes to sports success.
Yeah, the interesting part is I was in the Barry Bonds era in San Francisco, so I was a Giants fan at that time. And then I became an Oakland A's fan because we got tickets to the game. They were much easier to get to than San Francisco Giants tickets. And then when we moved to Seattle, not still a Mariners fan, I just feel for Seattle. I've never gotten it so much into it after I gotten back.
Yeah, it makes sense. It was a great series though, and it was close.
Close and
It was
tight.
it was close and tight. Yeah, so it's great entertainment for a fan.
Awesome. Give us a little bit of background. Give us your career arc, actually. You've now moved into venture, but you've been an entrepreneur. You've been in a different set of companies as well. Walk us through your career arc. How did you get to where you got to?
Yeah, it's my career is has been a bit of a zigzag. I jokingly tell people that I've had every role within a startup other than finance. Some highlight stops is I started my career in sales, was fortunate enough to sort of land that sales job at a fairly high growth startup at the time. Jesus, about 20 years ago. And I kind of got the bug. I got the bug of growth, and particularly in that kind of revenue generating role. I got the bug of kind of the revenue trajectory and what that means for a startup and how exciting that can be. And then from there, I kind of zigzagged my way through the organization. Got a role in marketing with a bit of a focus on product marketing, moved into product management, had a stint as a founder for a couple of years. And unfortunately, that didn't work out, but some great lessons learned and some great memories. And kind of continued to double down on my product leadership skills. Went through two exits
Hmm.
as a product executive over the last, I guess, 7 years. And then of late, as you mentioned, I now am the head of product at a venture studio here in Canada called Koru. So kind of sitting at the other side of the table, so to speak, working with aspiring entrepreneurs instead of sort of being one myself per se, at least for the time being.
Walk us through, for the people that are not aware, there are various different supporting organizations in the startup ecosystem. There are incubators, there are accelerators, there are venture studios, there are venture accelerators, and of course, there are traditional venture capitalists. What does a venture studio do? And I think you actually are in a unique position because you actually are part of a bigger organization as well. So walk us through the concept of a venture studio. What does it do? How does it get all the ideas that it comes from? How do you vet them, and which ones do you decide to focus on?
Yeah, that's a great question. So, to a certain extent, a venture studio, a lot of the terminology is fairly loose, I will admit. But for the most part, a venture studio is kind of an offshoot or a different version or an evolution of a traditional incubator. And
Mhm.
what I mean by that is the similarities between a venture studio and an incubator center around kind of supporting infrastructure and resources to help an entrepreneur validate and kind of launch an early stage idea. In my case, with the venture studio that I work at, as you mentioned, we're part of a larger organization, specifically one of the large pension funds here in Canada. So, as such, the twist that we offer is all of that kind of supporting infrastructure, the resourcing, the experience base of our operating team. However, our mandate is to work more so in a kind of a corporate venture or a corporate innovation sense, in that we work alongside other assets or other companies that our parent company has invested in to identify opportunities either for innovation or ideally kind of joint venture opportunities to spin out kind of a unique entity, startup or otherwise within kind of the market segment that some of these, in the for the most part, fairly established companies have already been in. So I'll actually give you an example to make it a little clear, not sort of in my world, but an example that maybe your audience would understand.
Yeah,
An organization, a very large sort of company that people would be familiar with that actually runs a corporate venture type program is Louis Vuitton, LVMH.
yeah.
And one of the more interesting kind of ventures that LVMH corporate venture studio launched was actually a blockchain company that leveraged blockchain technology to authenticate goods. And if you
Original
yeah,
versus fake.
correct. And if you think about, Louis Vuitton and kind of the prestige brands of LVMH, that's almost a perfect fit. And kind of within that ecosystem, they have a venture studio that offers kind of resources and folks like myself that could go to, literally the purse company and help them launch something that is kind of outside of their scope of experience, but well within kind of their market segment. And you can think of kind of my job in a similar circumstance with a little bit less glamorous, if you will, of corporate partners as LVMH.
So when people within the pension fund, especially fund managers, they are working on problems. The big advantage, obviously, which we keep talking to startups about, is getting customer access, customer discussions, talking to customers about problems, right? Because whoever defines the problem very well usually ends up actually solving it in the right approach. Now, a lot of these folks that come to you probably face their own problem, which is one of the best things to solve. They face it on a daily basis. They're not able to analyze something, or they find that some problem that they're trying to get to takes a lot more time to be able to get done. So they want to work on those. Is that good thing or a bad thing that they are colored by their own view of the world in the sense that they get the problems that they're facing most and maybe a couple of others within the organization, but does that help you in the sense being able to go out to talk to other customers as well, or is that a part of the work or not?
Yeah, absolutely. As you sort of pointed out, it's kind of a double-edged sword. So the big benefit there, as you said, is there's not a lot of wheel reinventing, or there isn't the problem of kind of getting to customers or getting customers inertia, kind of that 0 to 1, a classic 0 to 1 challenge, if you will. These are established brands within their market segment. As an established brand, they both have sort of established customer bases, typically fairly kind of loyal customer bases, as well as established processes. So that's the benefit. It gives us a head start to validate, test ideas, and explore. The downside of things is they are established companies. So as an established companies, there's kind of two challenges. The first challenge is, they are companies by and large that have reached, kind of call it global scale, for lack of a better word. So once you get that big, then overwhelmingly, in my experience anyway, one of your driving motivating factors is risk reduction. You and I both know that risk is the name of the game when it comes to startup. So there's a fair bit of convincing and sales, if you will, to allow them to open up that envelope of risk, especially when exploring new ideas. The other challenge is more of just a classical challenge. Is when you are close to a problem,
Yeah.
sometimes you don't see the details. That's why we get third parties or strangers to proofread our work because when you're so close to it, sometimes you miss the important pieces.
When you're looking at the one thing that was interesting to me, I was there, as I mentioned to you, beginning of the call. I was in San Francisco. Tech Week is going on. Tech Week, I think you may be aware, this year or the last couple of years at least, A16Z has been sponsoring and coordinating all the events. Tech Week is like a week full of just 2,000 different small events held all across the San Francisco Bay Area by different organizations. In Tech Week, obviously the big thing this year was AI. It has been for the last couple of years at least. But this year, more so than anything else, two trends seem to be emerging very quickly. One is AI-driven agents, and the second one is revenue growth. Now, the interesting part, Jason, is nearly 1 to 2% of the companies at max are the ones that are seeing dramatic revenue growth, like 0 to 10 million in 1 year, 0 to 2 million in 6 months, or some things like that, right? But almost everybody in the VC community is expecting that out of every one of the companies because even they only have to invest in the 1%. They don't have to invest in everything else, right? Is this something that is in your mind a permanent fixture? Meaning someone has to, it's like the 4 minute mile, right? Now that one person has done it, everybody's like, oh yeah, you can do 3 minute mile or you can do whatever. You can really strive for something bigger. Let's get to 10 million in a 2 month time frame as opposed to a 1 year time frame. Do you think that this is a a point in time where all the things, all the stars have been aligned to be able to get to that revenue mark in short order, or is this a new norm?
I think maybe. So there's two. I think there's two extreme ends of the conversation spectrum. I think what isn't sustainable is called the VC, the superinflated VC metric expectation. So it used to be that the benchmark was double your revenue 2 years in a row, triple your revenue 2 years in a row. Maybe a 10-year path to 100 million. That was kind of the rough kind of expectation
Is
template.
it triple, triple, double, double, double?
Triple, yeah, correct. Triple, triple, double, 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 and then you get to 100 million over 5 to 10 years. As you said, a lot of the standout outlier stars in the AI space, they're hitting 100 million within 6 months. So I think that expectation is fairly overinflated. However, I do think it is the new norm that some fairly material, if not dramatic, acceleration of that triple, triple, double, double recipe will be the new norm moving forward. And the reason why is I have kind of my own thesis is everybody's familiar with Jeffrey Moore's crossing the chasm and the diffusion of innovation. And my suspicion is AI alongside mobile, internet, cloud, all the sort of cumulative innovations over the last 20 years have actually compressed that diffusion of innovation. So whereas it used to be, the vast majority of the general population, the general buying population was in that late adopter sort of stage at the other side of the hump of the chasm. I have a funny feeling that actually a lot of people have been front loaded. So the good
Hmm.
news, bad news is I would expect some acceleration in that kind of VC expectation metrics template. That being said, there is a catch: is there's only so many people, period. So perhaps that the slowing down of those growth curves may also start to happen sooner as well, even for some of these AI outlier companies.
The interesting part was I invested in Zoom, the company which we are on the platform on right now, um, just before COVID. And if you remember, the growth rate during COVID was ridiculously high. I remember going for a run, and I suddenly, at the end of the day, heard the Zoom CEO on the quarterly earnings call. I don't know if this was March or July of 2020, but he was doing 106% growth quarter over quarter. It was ridiculous growth. And now, if you look at it in hindsight, he just forward-ended a lot of that growth that he had expected over 5 years,
Yep.
2025 in 2020, right? Because since then, they've been flat to going down. It's like 2% growth year over year. I wonder if the market for vibe coding, which is the number one thing that I've seen consistently grow off the chart numbers. I've seen so many companies, at least three or four companies in the last 6 months, which for me is a lot, coming to me and saying we've hit 10 million, 20 million, 30 million, 50 million in revenue. I wonder if they're just pulling forward growth, or is this a sustainable, they can get to a significant level. The same thing goes for Shopify, same thing goes for Peloton. You look at Peloton, it's nowhere right now.
Yep.
Shopify, it's nowhere. Etsy, yeah, it's doing something. Nobody knows what it's doing. They just pulled forward the growth of 2025 to 2020, and then they're just flattened after that. What do you think on that? If I look at it from a long-term perspective, I'm going, I've seen this movie before, but I wonder if it is the same movie.
Yeah, I agree. They say history rhymes. And looking back, I'm shocked when I look in the mirror in the morning that I've been in this business for 20 years now. But the benefit of being in the business for 20 years is, as you said, I've seen a lot of movies. And it turns out that some of those movies, they're sequels, so to speak. So my gut is that you're bang on. Is if you look at a Shopify is a great example as well that you brought up, is they kind of front loaded a lot of growth coming out of COVID. But if you look at them today, if you were to remove that period of time from 2020 to say 2023, tail end of 2023, they've
Yeah.
actually just returned to the same growth level, more or less, that they had in 2019. But they had in between a gigantic spike and then a gigantic trough. I don't know that it will be so dramatic in the AI space. Vibe coding is a great example. That being said, I would expect them to tail off. And then the other movie that I've seen before, once that starts to tail off, I wouldn't be surprised if they start deploying either natively or kind of through their VC investors or private equity, kind of, again, the other playbook that you and I have probably seen before, which is consolidation as well.
Yeah, yeah. No, I think the interesting part to me is what is the narrative that they tell right now, and what is the narrative to go going forward, right? So AI overall, the thing seems to be right now vibe everything, vibe coding, vibe design, vibe development, vibe debugging, vibe testing, vibe everything, right? And not every part of the vibe story is growing as quickly as vibe coding is, primarily because of non-developers. Developers as well, but they are a much smaller community. There's 20 million to 30 million developers, depending on who you talk to. There's 400 million people that want to code that don't. So the big growth has been in the non-coders, right? The people building Shopify stores, the people building simple apps, inside apps, whatever you want to call them. And my thinking has always been at some point in time, these people are going to go, I want to make it much, much easier to do this or not. I'm not going to adopt it, right? Because even right now, 80%, 85% of the people just don't renew. They trail off because they get frustrated with the vibe coding experience,
Mhm.
since it's not as easy as what people tell you it is supposed to be. I've heard so many of these things where someone say, I want to clone a GitHub. That's the only prompt you need to put. And then 10 minutes later, it comes up with something you're like, oh, wow, it looks great, but it doesn't do jack.
Yep. Yeah, it's fascinating. Again, in the theme of, sort of we've seen this movie before, is I think that the crux of vibe coding and vibe everything, as you described, really is democratization. Democratization in this case of a skill set is, that's been the tech play from the beginning of time. I think one of the challenges that vibe coding in particular is starting to run into is, again, probably the hardest lesson that you and I have learned, I assume, this is definitely the hardest lesson that I've learned, is it takes more than a few lines of code to build a business.
Yeah.
And, the reality is vibe coding is a tremendously powerful segment of tools to help me kind of accelerate and dramatically remove the friction of writing those lines of code. But there's all kinds of other effort that you need to put in to make a dollar from that, from those lines of code. And I think, um, that plus even just the skill set of knowing what to build and having the taste of making kind of some of those trade-off decisions within creating those lines of code, all that kind of supporting infrastructure, supporting skill set, and supporting jobs, if you will, or roles. I think those are emerging both as frustrations and hopefully opportunities for aspiring entrepreneurs to start to zero in on actually building out, call it the value chain of AI software development lifecycle versus just zeroing in on the writing code part.
Yeah. Tell me, what do you think about this? As you're talking to the folks in the venture studio as a product person, does go-to-market become that much more important given that it's a little bit easier or maybe much easier to build right now? Do you think that it is one of those areas where you're going, yeah, distribution is the bigger challenge right now? We've heard this story. You and I have been through this a couple of different times. First time entrepreneurs obsess about getting a great product, and second time entrepreneurs obsess about distribution. Really, it is both, but the second time entrepreneur is going, fix the distribution first, figure out what you got to distribute first, then you figure out what to build.
Yeah, absolutely. I think kind of the implication in your statement is something that I agree with, which is distribution has always been arguably a more important part. Obviously, you need something to distribute out of necessity, but getting your distribution channels up, getting your brand established, and kind of all the ugly work, if you will, into monetizing what it is that you're building has always been, a disproportionately difficult part of the equation. And as you reduce the effort and friction associated with the creating the thing part, I think to your point, more and more focus, more than ever, if you will be put on the distribution and sales and marketing, frankly, piece of the equation.
Yeah. Tell me a little bit about your experience having been in this venture studio for a little bit. What kind of ideas are you seeing more people come up with right now? Is it mostly I want to do Excel for AI kind of things that you're getting from the folks in the rest of the pension fund, or are you seeing very bizarre different ideas that you wouldn't have expected?
You know what? What's interesting is I see a lot of moonshot ideas, and I'm very thoughtful about the language that I use is that they are moonshot ideas. They are maybe AI can be a magic button to fill in the blank, which are great ideas. But in terms of opportunity, I actually find that the AI for Excel tend to be better opportunities because, let's just call it AI for Excel at the moment. Those are much more clearly defined problems, much more pervasive problems, much more kind of recognized problems within an industry segment, which, they may not end up being, call it the cure for cancer 10 years down the road. But in terms of a kind of clearly monetizable opportunities of, kind of fairly solid business, I actually find believe it or not, I find those sometimes a little bit more interesting and definitely more executable.
Yeah. Tell me a little bit about what you're seeing in the world of being able to navigate as an entrepreneur, navigate this whole area of incubators, accelerators, and everything else. I've seen very rare cases of people going from one to the other, just trying to find product market fit. But usually, even now, if you look at 3,500 companies that got Series A, 80% of them never went to an accelerator, or even 85% of them never went to an accelerator or incubator or any other program. Is that the norm, or is this just a point in time? Because everybody hears about Y Combinator companies, but they're a very small percentage of the overall.
Yeah, I might sound like a boomer saying this, but one of the things that I've learned, or one of the things that I've observed anyway, particularly in the work that I've done working with earlier stage entrepreneurs, let's say, is oftentimes the biggest challenge or the biggest obstacle is sometimes you don't know what you don't know. So a metric as a guy, you know, closer to retirement than the beginning of my career. I love reading articles about how, actually the success rate of older entrepreneurs is much greater than the success
Yeah,
rate of,
yeah.
of younger founders. And I truly believe that it's just because sometimes you don't know what you don't know. And there's two ways to get that. A, you can just sort of wait and get that over the course of, 10, 20 years. Or B, you can accelerate that with more formalized education. So I think particularly if you skew kind of earlier in your career or just, maybe you only ever worked in one place, frankly, then programs, be it an accelerator, venture studio, something as established as Y Combinator in their startup school, it can fill in the blanks, if you will, without you having to kind of live through the pain in some of that you don't know, so that you can kind of even the playing field of the context in which you make decisions and the context in which you plan, which as you and I both know, sometimes it's just the nitty gritty of I remember what this scenario looks like, and I don't want to do it the same again.
Yeah. Tell me a little bit about what you think in the area of product. Let's focus now on the product side. How is the SDLC as we know it, its software development lifecycle has changed quite a bit because of Agile, but it's now going to go through another set of changes. No longer are people building, product requirements documents and then putting them into sprints and things of that nature. I'm seeing a lot more people just building out simple prototypes, taking it to customers, seeing what works, coming back, which means everybody now, given that the fact that there are so many vibe coding tools available, are building prototypes. Is that changing what happens dramatically with the building a product side as a CTO and a product guy? What do you think is going to change?
I think where it will change, or the change that's occurring, is in, call it, the concentration or focus and skill set. As you said, Agile brought in a great methodology to be able to ship faster and make micro decisions faster as you're shipping and iterating through versions. So, I think AI, vibe coding in particular, or at least AI supported kind of IDE environments, they accelerate the front end of writing the code to the point where the optionality or the versioning velocity will be much, much greater. So whereas in the past, you would ship a version and maybe you had a period of 6 months to be able to decide, where you want to go with the next version based on feedback, so on and so forth. Now, if you compress not only the time to ship the version, but the volume of versions that you can ship, maybe I can ship 10 versions at a time. So, rather than kind of having half of my focus being on kind of the project management, resource management, and kind of stewarding the process, and then half of my focus being on, synthesizing and gathering customer feedback, I think it'll probably shift to be 20% working on the project management, 80% working with customers to really, elicit kind of a much faster iteration cycle and ideally getting to the better answers sooner and getting to the better answers sooner using kind of a marketing demand gen terminology with kind of multivariate testing is something that product managers will be able to take advantage of, which in the past you just couldn't because of the nature of effort required to build software.
Yeah. Do you see a lot more people talking about, compared to where it was about 2, 3 years ago, do you see a lot more people now talking about the fact that we are using AI significantly in the process, right? One of the things that I learned yesterday was um, Cloud Code now has come to the web. So that essentially means it gives the ability for a developer to have multiple separate multi-threaded tasks assigned to Claude code on the web, which it can then independently execute and come back and tell you which one's working, which one's not. So let's assume you're a developer that is working on a or a full stack developer working on a product, and you now want to be able to start doing the back end to add a capability. Front end needs some changes. The business logic needs some changes. You can literally start all three of them at the same time and finish that and get it completed, or they will all work at different paces, obviously, because some of them may be a larger task versus smaller. That suddenly makes a 10x developer become a 100x developer. Does that mean we're going to have a lot more have and have nots? Because it doesn't seem like it's making it easier.
Well, that's a great question. Is so let me answer in two halves. So I agree with you 100%. I think the opportunity, which is most sort of evident or earliest to manifest, is to take that 10x resource and make it 100x. The metaphor that I love about AI is effective AI is about managing a swarm of AI agents. And
Yeah.
there's a couple implications. The first implication is the scale of resourcing that you have. The other implication is being very specific in being able to define what the unique tasks of each bumblebee in your AI swarm is. And you described it perfectly. As a developer, you could, have a front end task, a back end task, an integration task, so on and so forth, defining very crisp outcomes and very crisp kind of responsibilities for each agent in your agent swarm, so that you can then scale yourself. That may, as you said, create haves and have-nots, because one of the most valuable and increasingly valuable skill sets is actually to be able to think in terms of those systems, to be able to have that call it architectural level thinking, which I don't know, maybe from an education and professional development perspective, maybe that's where organizations need to start putting more resources so that you can have more architects and less doers, because frankly, it will be the doer jobs that AI will at least initially start to erode away.
Yeah. Let's wrap this up with a quick question on what you think are some of the things that AI is going to actually change in the world of product itself. Given that you're a product guy, given that people who are working in the product organization tend to be able to, some way, shape, or form, be the domain experts because they understand the customer problem, they can actually develop. Does this make engineers more focused on things that might be longer term and scale versus the product managers and the product people can actually build some stuff just to be able to do prototypes, get some things going, see if there's something that is working, and then move from there?
Yeah, I think so. I think kind of that Venn diagram of responsibilities will start to expand for product managers to encompass more of that, call it the discovery phase. Traditionally, the tail end, let's say, of the discovery phase was the idea of prototyping, kind of, quasi-live software. I think with the available tooling today, it would not be outrageous to expect product managers to own much more of that, almost through to the beta cycle, so to speak, when it comes to the software development lifecycle. And in that, and the implied kind of velocity change there, I think, for me, I think increasingly the most important skill set for product managers will be taste. For some reason, nobody ever thinks of him this way, but I think the best product manager ever was Steve Jobs. And
Mm.
ultimately, Steve Jobs, magic skill was taste. It's a little bit of an ambiguous ask, but I do believe taste and sort of being able to determine the best path or sometimes the least worst path will absolutely be the number one skill set required for product professionals.
Awesome. Jason, this was terrific. Glad we got connected. Glad we continued to discuss where AI is changing in, at least in the incubator world, as we continue to move. But I'd love to have you on maybe another 6 months, a year, see how we progress. And it was awesome to have you on the show.
Yeah, it's great. Thanks for having me, and I would love to chat again, and we can see how close some of our predictions may or may not have been.